Hello and welcome to the business edition of PM Express. My name is Philip Namfuri. Today we'll be talking to the Director General of the Securities and Exchange Commission of Ghana, Reverend Daniel Tete. We'll have a very light conversation on what's going on in the capital markets. How far are we going to go with Ghana's capital markets industry, and how far they are going to go as regulators to make sure that everything in the capital markets is right. Of course, the capital markets is where we access long-term funds, to put it very simply. So without further ado, I'm going to jump straight to him and introduce him, and we'll get our conversation going. Reverend Daniel Tete, thank you very much for joining us.
My pleasure.
All right. Before I begin this conversation, I want to say a happy birthday to the Securities and Exchange Commission.
Thank you.
We hear you guys are turning 20 very soon. Yes. If you can share some light on that for us.
Okay. So as you may know, the capital market in Ghana itself, got off to a start, if you like, in 1990. Then we didn't even have the Securities and Exchange Commission as it currently is constituted.
Okay.
So the function of the SEC then was being done by the governor through one of the departments of the Bank of Ghana. Okay. So in 1998, that was when the Securities and Exchange Commission was established and became a standalone entity to focus on developing the capital market in Ghana. So we've had 20 years of having the SEC, and I think that there is a lot that we can look at and point to and say that has been achieved in terms of development of the capital market in Ghana. So I'll just give you a few highlights. So when the stock exchange was established in 1990, there were about 11 listed stocks. Currently, you have around 40 listed stocks. And then also we had just one market, that's the main board of the Ghana Stock Exchange. Today, you can talk about the Ghana Fixed Income Market. Okay. You can also talk about the Ghana Alternative Exchange, which is the exchange for SMB, the small, medium size enterprises. And as you also may know, just yesterday, we launched the Ghana Commodities Exchange.
Very good.
So over the 20-year period, we can talk about 4 trading platforms: the main board of the Ghana Stock Exchange, then the Ghana Fixed Income Market, and then the Ghana Alternative Market, and now the Ghana Commodities Exchange. Again, we didn't have collective investment schemes operating in Ghana at the time, but over the years, SEC was able to ensure that the regulatory framework was put in place, and so between, let's say, the 1998, 1999 there, but we've had a number of collective investment schemes coming up. At the last count, we have 53 collective investment schemes, 34 mutual funds, and then 19 unit trusts. And you have a number of Ghanaians investing in them. This was non-existent. Okay. So we can say that through the SEC, we have seen more participation of individuals and institutions in the capital market or in capital market instruments. You can also talk about the fact that we didn't have a market for the trading of bonds or fixed income instruments, and that limited the tradability of those securities. But now we have the Ghana Fixed Income Market, and we can see that going forward, the fixed income market is going to be an important market. We're going to see more activity on the market. Again, over the years, a number of companies have been able to raise capital through the stock exchange. They've done both the initial public offerings and then those who have done rights issues, but all in all, raising capital. And as you know, when you're looking for long-term capital, the place really to go is the capital market or the securities industry. So in a number of ways, we can see how the capital market has developed, and that has been through the instrumentality of the Securities and Exchange Commission.
Okay. You've set the tone for our conversation. You mentioned collective schemes.
Investment schemes.
You mentioned unit trust. You mentioned mutual funds. you and I may understand.
Okay.
But to our viewer and listener,
right,
it might be a bit funny. Can you just break it down for us? Coming from you, it will give it all the impetus it deserves.
Okay, thank you. Now, unit trusts and mutual funds are examples of collective investment schemes.
Okay.
Now, we say they are collective investment schemes because it's a collection of individuals, so a number of people coming together to invest in a fund. So the mutual fund or the unit trust, they are specialized investment companies whose main object is to invest the money that has been contributed by the various shareholders or investors into some underlying securities. I'll explain, just to make it clear. So you can have, let's say, a money market mutual fund, and that means that a number of people, especially those who may not be very rich or do not have deep pockets, and you know, they'll be able to bring maybe a 10 cedis, a 20 cedis, a 50 cedis, and so on and so forth. So many people bring that money. There's a professional fund manager whose job will be to invest the money that has been contributed by all these different investors, and they will, the fund manager will, for instance, invest it in, let's say, some money market instruments like treasury bills or other bank, you know, fixed income products. Okay, so it is collective because it's a number of people coming together. We like to say that collective investment schemes is a way of democratizing investment because a number of people, they pool their resources together. There's a fund manager who will invest the money that's been pooled together in some underlying securities. So you can have a money market mutual fund or a money market unit trust. You can even also have a capital market or an equity mutual fund or unit trust. And when you say equity mutual fund or unit trust, it means that that mutual fund or collective investment or unit trust has invested in shares that are listed on the stock exchange, for instance. You can have a situation where the mutual fund or the unit trust will blend a bit of money market and a bit of equities. So it's a balanced fund. So basically, it's pooling of resources together by lots of people with a professional fund manager who will invest the monies pooled together in some underlying securities. A key thing is that it helps in diversification. It's easy to enter and exit. And also, because it's a professional fund manager, you are more likely to achieve your investment objectives because many of us don't have either the time or the expertise to really know what to pick when it comes to investment instruments or securities. So that's a key attraction of collective investment schemes. Okay.
You raised a very interesting point about the number of listed companies on the Ghana Stock Exchange.
Right.
40. Before I come to my question, my main question, is that number enough for where we are in our capital market development?
Of course. I mean, many of us would say that would have wished that we had more companies listed. And even though I've indicated that we have about 40, I'm also aware that a number of them may be even delisted, you know, for all kinds of reasons, a few of them, you know. So clearly, the numbers are not where one would wish. If you're a fund manager, for instance, you want to have the luxury of being able to select from a wider, you know, universe of instruments. So it can be challenging, and I think that we need to have all the different, you know, actors in the country, and by that I mean both government. That's where there are some state-owned enterprises that can be, you know, divested and, you know, the stock market used for that, and then some good private companies. They are doing well. They can also come to the market. Some multinational companies. Thankfully, recently we had MTN coming through. You know, so we need to engage more and have more people look at how we can strengthen the capital market, because if you have a strong capital market, then you know that you have the platform where you can raise patient capital or long-term capital, and you can really not talk about accelerating economic growth or achieving economic development without patient money. So we all need to contribute to ensure that we have a strong and robust capital market. So I want to see more companies listed on the stock exchange.
Okay, stock exchanges are described as barometers of economic growth within a country. So if you look at the US, anytime there are fluctuations in the Dow Jones, the S&P 500, markets are moving. When I watch Bloomberg, I see a lot of fuss about what's going on. Do you think it's about time we start compelling industries, certain segments, certain companies to start listing on our stock exchange to provide the needed growth it needs, or we should allow the market to adapt with time?
I think there's a place for using some amount of force.
I like that.
or compulsion. And I can say that the SEC, I know, has been promoting this idea of local content in the sense that especially for the multinationals or those who have who need all kinds of licenses to operate in various lucrative sectors of the economy, the idea is to make it almost mandatory or as a condition for renewing their license to offload some of their shares onto the Ghana Stock Exchange. And indeed, we can say that the recent listing of MTN on the Ghana Stock Exchange is an example of that, because the NCA made it a condition for their 4G license. So I think it is in order to put in some compulsion, to put in some force. Moral suasion is there, but in economies like ours, and like you rightly said, giving the pivotal role that the capital market can and should play in an economy, I think we should pull all the stops to ensure that we have more companies coming through. So we are all for this concept of local content and having a way of forcing companies to come to the market.
So will you be willing to stake any timelines to this, or as time goes on we should see the SEC trying to push this moral suasion, if I can put it that way?
Oh, we already have set something in motion where we are looking at engaging companies more. We recognize that in some cases it may be a question of not being aware of the opportunities, the benefits of coming to the market. Some may have the perception that it is too demanding, it gives you unnecessary public scrutiny and all of that.
Yeah.
Of course, I know that there's also that Ghanaian thing of wanting to hold and own everything to their chest. But I think that if we can sustain a campaign to get companies, to get even would-be entrepreneurs or young entrepreneurs to appreciate the fact that there's a lot to gain just by becoming a listed company. I think gradually we will be able to change the culture, and people will be more warm, or they'll be more open to the prospect of becoming listed. And like I said, we even have the Ghana Alternative Exchange, which is the market for the SMEs, and which has lower requirements, making it easier for them to list, because we think that we need a nice mix of the small and medium sized enterprise as well as the big multinationals and big companies. So we will, while I cannot give you a timeline, it is something that we intend to aggressively pursue over the years. But let me also say that when it comes to listing, it may take some time, because the company may, for instance, have to be able to have its, for instance, accounting records kept in a certain, manner, and so on and so forth. And in some cases, some people are not doing a good job at that. So you need an advisor to hold their hands and help them over time. So it may not be a dramatic response, but we expect and we hope that it will yield some fruit and we'll see some more listings on the market.
Okay, you spoke about the Ghanaian thing, and it's very important. Anytime I hear a company, upcoming business, startup, looking for funds, the first thing that comes to mind is bank loan. Let's go for a loan, let's go for a loan. When you try and speak to people about the Ghana Alternative Exchange, it seems like it's something new to them. What will it take to shift the mindset of particularly people like us here in Ghana, that it's not only banks that can provide funds, the capital market is there with a wide array of investors? What is it going to take to change the mindset of the Ghanaian entrepreneur to change their approach towards this?
I think that we need to sustain the investor education. And some of us are of the view that we need to find a way to introduce investor education or education about the securities market or industry, even in the educational system, so that, because really those who become captains in various in industry or become CEOs and so on and so forth, they come from the education institution. Exactly. So if you can catch them young, if I can use that expression,
I like that,
and expose them to, you know, the rubrics of the capital market, how it works, the benefits. I think an earlier introduction will make them more used to the idea, so that when they are in industry and they are sitting in positions as CFOs or CEOs or whatever it is, and let's say an official of the SEC or the Ghana Stock Exchange, or even any of the market operators approaches any of them, I think they can relate to the concept more. And I think that if we are able to sustain this campaign over time, we'll find that the culture will change. Then also, I think we need to have more visibility to the stock market. And I think this is where we need the support of, for instance, the media,
okay,
in terms of projecting some of the success stories or some of the good stories about companies that are making use of the capital market and how it is impacting their operations positively. Because again, more visibility makes for top of mind awareness. Yeah. And then people, like you're saying, instead of thinking straight about going to the bank for a loan, they'll say, wait a minute, I think I have options. Apart from the bank, maybe we can look at the capital market. What are the, you know, the different scenarios? And then it can, you know, ignite a certain trend towards making use of the capital market, because there are opportunities, and it can be, you know, very meaningful. I think we might have to find a way of demystifying the notion that using the capital market can be expensive, and then it can be too demanding. I think sometimes people feel like, well, I don't want to go near, it's too much.
They are too focused on the negatives.
I think so. So probably if we can trumpet all the positives, give more visibility, intensify education, and of course as regulators, if we also ensure that the process doesn't suffer unnecessary delays, and people realize that, oh, the turnover is good. I think that, I mean, the turnaround time, sorry, yeah, is good. I think that it can all help in making the option of using the capital market to finance business growth and expansion more of an option than it is currently.
Okay, so we've been speaking to the Director General of the Securities and Exchange Commission, Reverend Daniel Ogbamitete. When we return from the break, we're going to push a bit into corporate governance. Yes, corporate governance again. It's not about the banks this time. It's about the capital markets and their governance structures. Stay tuned. This is PM Express Business Edition. My name is Philip Nanfuri. So we've been talking to the Director General of the Securities and Exchange Commission, Reverend Daniel Ogbamitete, about how far Ghana's capital markets has come, and as regulators, what they are doing to ensure that we're on the right footing. We've heard about the Ghana Fixed Income Market, Ghana Alternative Exchange, where small businesses, SMEs, can raise funds with less listing requirements, as you would see on the main bears on the Ghana Stock Exchange. He has also explained what collective income schemes are. No, that's not income scheme.
Investment scheme.
Collective investment schemes are unit trusts and mutual funds. Now we're going to talk about regulation a bit, a new corporate governance guideline, sandbox regulations. Then we'll go on to talk about guaranteed returns. When you go and place your funds and they tell you 20% or 21% or 25%, is it legal or illegal? Reverend, thank you very much.
My pleasure.
So with regards to corporate governance, I know there was a code in 2010, And I've seen that on your website, which is very, very good, by the way. Kudos to you guys.
Thank you.
I see there's a new draft there. Can you explain the difference between the 2010 one and what's currently on your website?
Okay. I believe you would agree that over the past few years, a number of things have happened which has brought into sharp focus the need for corporate governance to be strengthened. Now, we have a situation where we believe that if we are going to achieve investor protection, apart from ensuring that investors are well informed, it's important for our market operators and then our issuers as well to practice best standards when it comes to corporate governance. So the latest corporate governance code that we have released, that is for listed companies.
Okay. And
then we've also come up with what we call conduct of business for our market operators.
Okay.
Okay. So I'm trying to distinguish between the issuers, that's like the listed companies, and then our market operators.
Okay.
So we are basically tightening the requirements and really adding things that, you know, today would count for global best practices when it comes to corporate governance. So for instance, when we talk about the need for independence of the board, now we have situations where some boards, the composition, you can see a lot of independence in there. In other words, the directors are not really independent.
Yeah.
In the past, there's been talk more about executive directors and then non-executive directors. But you agree with me that you can have non-executive directors who may still be who may not be independent. So we are looking at a situation where we want the issues that the listed companies, when they are looking at the board composition, we are saying that not only must you have non-executive directors, but they must be independent non-executive directors, you know. And then we're also looking at the fit and proper test, who can qualify, you know, to be on the board and so on and so forth. And basically just bringing in all these new provisions that would ensure that corporate governance practiced by the listed companies is good, so that when investors put their money in those listed companies, they can be sure that the directors would run the affairs of the company in their best interest. And then the conduct of business is, if you like, the corporate governance version for our market operators.
Okay.
Is broader than the corporate governance, but it has a lot of provisions that border on how they should also have their boards. We recognize that some market operators have boards that are not effective. They don't meet, even the committees of the board are not instituted. You know, all these things are provided for because we want to make sure that our operators are operating, you know, at that level that will give confidence to investors, because when corporate governance breaks down, then it leads to challenges because it can affect the operations and the profitability of the entity, and the people can end up losing their money. Of course, we know that when you are investing, you are taking some risk to be compensated for, but the regulator, one of the ways we will or we can protect investors is to ensure that our operators, our licensed operators, observe the right kind of corporate governance practice so that they do a good job in protecting the interests of the investors who may have invested in them. So we intend to issue the code on corporate governance for listed companies, and then the conduct of business for our market operator. We'll issue them to the market before the end of the year. Okay. Like you said, yes, it's on our website. We did a lot of engagement because we even asked the market and the listed companies to take a look at the provisions and to raise any concerns that they may have. I think one of the concerns that came was the fact that, some, especially the listed companies, were thinking that we should try and achieve some greater harmonization with the corporate governance code released by the Bank of Ghana, for instance.
Yes.
Okay, but you have to recognize the fact that our mandate is broader. Bank of Ghana is talking about banks. Now, if you take the Ghana Stock Exchange, you don't only have banks there. Exactly. You have banks and then other institutions from other sectors. So I think it's conceivable, it's understandable that our code may have some other provisions that may not be in the Bank of Ghana's corporate governance code. Yes. But I can tell you that when we were crafting our own, of course, we got a help from a consultant to do that. But as we were reviewing it and tightening it, we also took a look at the Bank of Ghana's version, okay, to look at it. So we have made sure that it is adequate to take care of not just the banks that are listed on the exchange, but all the other companies that are listed. So we believe that if our operators and the listed companies are able to go by the code, it will go a long way to inject greater efficiency and effectiveness in their operations and ultimately help in strengthening the capital market in Ghana.
Okay, just a quick one before I get into the sandbox.
The sandbox.
Very, very interesting word. Do you think it's about time our market should look at, for example, correct me if I'm wrong, in the USA, they have the Sarbanes-Oxley Act that sort of puts the whole structure for corporate governance. Do you think it's about time where, I know there are some elements of governance in the Companies Act, do you think it's about time where we have a whole corporate governance code that regulates all companies in Ghana, regardless of where you are playing? So it's not like BOG has its own, SEC has its own. Do you think it's about time we get something like that?
I won't disagree that it's a good thing to have. If you like, it makes it easier for different players. You know that when you talk about corporate governance, this standard is there. Because really, somebody can even argue that the elements of corporate governance, can be applied no matter the sector, yeah, exactly, or the industry, whether it's the composition of the board, the regularity, how often they meet, the board committees, and all of that. Exactly. I mean, those are principles that can cut across different sectors and different industries. Okay. So I think that it wouldn't be out of place to have a code that can be applicable to all corporate entities.
Okay. Now to the most interesting part.
The sandbox.
Sandbox. Reverend, what exactly is sandbox? Because somebody asked me, sandbox, so many names are coming up. What exactly does it mean for us? Okay.
So it's called the Regulatory Sandbox License. It's not new to Ghana, or it's not something that we are coming up with. Okay. It is a concept that is used in other markets, and it's actually a vehicle to support innovation and creativity. Okay. You would agree that it's sometimes the case that the market may come up with some innovation, yes, that you may not have existing regulations, or the existing regulations do not adequately provide for that new idea, that new product, that new service, that innovation. Okay. A good example is fintech. In a lot of jurisdictions where they have made use of the regulatory sandbox license, it was mainly in response to fintech, coming up, and the various regulators realizing that they didn't have adequate regulations to cover those new ideas. So the concept of regulatory sandbox license is to say that there is a framework within which new ideas or innovations will be housed. Okay. So you have a new idea, you have a new product, we don't have existing regulations, or the existing regulations are not adequate. Rather than saying to you that, no, you can't do it, because for a regulator to regulate something, there must be some regulations that would even set the expectations of the operator. So rather than say that you can't do it, wait until we have developed the regulations for it, and that would mean stifling initiative. The response of the regulatory sandbox license is to say that, okay, we don't have the regulations, or what we have is not adequate. However, we think that we want to support this idea. It can lead to market development. So this is how we are going to do it. We are giving you these restrictions, and we are giving you these conditions. Okay. We are giving you these reporting requirements. So you can go ahead, but we require that, for instance, you may report more frequently, okay, or there are some, some markets you cannot sell it in, or certain things that you cannot do. So the sandbox license would define some parameters, okay, to allow you to still carry on with the innovation, but just in the interest of protecting investors, you stay within some limits, some boundaries. And then the regulator over time can develop the appropriate regulatory framework, and then it becomes something that can now stand on its own. Because I would agree that it's not every time that the regulator would have even full knowledge about all the innovative products that will come to the market. So okay, the regulatory sandbox license answers to the need to support creativity in the marketplace. So we have decided to introduce the regulatory sandbox license into our licensing regime. Okay. We currently don't have it, okay, but because we are very much passionate about market development, we don't want a situation where the market will come up with an idea and then we'll say, hold on, sorry, we don't have the regulations yet, wait. I can tell you, for instance, that I talked about collective investment schemes earlier on, yes, and I can tell you that as far back as, I think, 1996, we had a semblance of collective investment schemes, but there were no regulations. Okay, so it was more like an investment club, and then with time, the regulations were put in place. So it is not uncommon to have a situation where the market is ahead of the law or the regulations. Okay. So the essence of having the regulatory sandbox license is to create that platform to encourage and support innovation rather than stifle it because you don't have either the laws in place or the laws in place are not adequate. So it's really to get people to say that, hey, just put on your thinking caps, be creative, push the envelope where innovation is concerned. Come to us, we'll put you in the sandbox, and then with the sandbox there'll be some boundaries, okay, but then you have that liberty to operate. And then with time, as we the regulators get comfortable, get more knowledgeable, and we're able to develop the appropriate regulations, over time, then you can get out of the sandbox because there'll be the regulations to support it. So that really is what is behind this animal called regulatory sandbox license.
Okay, you mentioned innovation, you mentioned creativity, boundaries. These three keywords stoke something in my mind. Okay. Returns. Sometimes it seems some of the returns we get on our investments are a bit too creative and seem to go out of the bounds of normalcy. Yeah. Because you see somebody offering 19-20% or maybe plus 3-4 above treasury bill rate. You go somewhere and somebody tells you 30%. Reverend, what does the capital markets regulator have to say about returns in the industry? Okay. Because I hear that some of guaranteeing returns is illegal. Is that truth? Right. Or not?
Right. Okay. So let me start answering from another point of view. I think it's important for your viewers to understand that there is a relationship between returns and risk. Okay. Returns is what you get on the money you invest. Exactly. Okay. But the principle is that there's a direct relationship or correlation between risk and return. So the higher the risk, the higher the return. The lower the risk, the lower the return. So anytime you are looking for high return, it means that you must be ready for high risk. So if you know that you can't deal with high risk, then it means that you must be content with low return, because that is the relationship. And if you go anywhere and you are told that the return is high, the risk is low, you can be sure it's a recipe for disaster. It could very well be a Ponzi scheme. Exactly. Because the relationship between risk and return is direct. Yeah. The higher the risk, the higher the return. Okay. Now, investment always involves a degree of risk. You know, so what really we expect investors to do is to assess themselves. How much risk can I take? Okay. Okay. And based on the risk you can take, then you go for this investment or that investment. And let me illustrate. If we take government of Ghana treasury bills, the risk is low because the issuer is the government, and government by definition will not default. However, if you take shares listed on the Ghana Stock Exchange, the risk is high because there's no guarantee that their performance will go up or it will stay where it is. It can actually even come down. Yeah, exactly. So the risk is more. It means that when you invest in equities, you can even make more returns than if you invested in the government of Ghana treasury bill. The only difference is that with the government of Ghana treasury bill, you have peace of mind. Yeah. There's no doubt about what you will get. So when we license fund managers, the mandate we give them is to educate investors and to guide them to make the right investment decisions. So for instance, fund managers are required to profile the clients that will come to them and to tell the clients that, well, based on your risk tolerance, this product is best suited for you because of the risk-return characteristics of this particular product. Okay. Okay. The fund manager is not supposed to give a guaranteed return. Okay, because once you're talking about risk, you know, you can't really guarantee. And if you look in our LI 1728, there's even a provision which says that you can't advertise a guaranteed return to a product except where there's a third party that is guaranteeing that return. Okay. Okay. So we do not, and if you look in our compliance manual, which we issued in 2006, and then a directive that was issued in 2014, we specifically directed fund managers not to issue fixed-term returns or guaranteed returns to clients. Okay. So what we expect fund managers to do is to use their knowledge and their experience and their expertise to match the profile of the investor or the client with available investment instruments. Okay. And then, you know, we expect them to use that experience to, let's say, outperform a certain agreed benchmark. Okay. So for instance, if you went to a fund manager and you have a big pot of money and you wanted the fund manager to invest for you, you tell the fund manager that, well, I can take moderate risk, not too high. Then the fund manager may recommend a certain portfolio to you. But the fund manager will then, after recommending the portfolio and with your agreement, then he would execute an investment management agreement, which says that these are the investments that I'm comfortable with, okay, that I can take based on my profile. Okay. And then you agree with the fund manager a performance benchmark. You can say, I want you to do better than the government of Ghana treasury bill, because you tell the fund manager, if I'm going to pay you, then you might as well do better than what I would get if I just bought government of Ghana treasury bills directly. So there can be a performance benchmark that will serve as the barometer to measure how well the fund manager is performing. So that is what we expect fund managers to do, and not to guarantee returns. Okay. Now, when a fund manager is guaranteeing returns, effectively, the fund manager is guaranteeing the return on its own balance sheet. And we know that the fund managers don't even have the balance sheet to be able to do that. Banks and other specialized deposit-taking institutions regulated by the
Bank of Ghana.
They are mandated to issue fixed deposits.
Exactly.
Okay, but our fund managers are not supposed to do so. So we gave a directive in June this year, even though, like I said, in 2006, our compliance manual already has it. In 2014, there was that directive also that fund managers must desist from the practice of issuing fixed or guaranteed returns. We in June this year reactivated that directive, and this time we gave a window, and we said we're giving them up to a 6-month window from July to the end of December to unwind, especially when the fixed investments or the guaranteed returns mature, not to roll over and not to issue new ones. Because what the fund manager must do is to help the client to situate his or her profile, whether it's high risk, medium risk, or low, and then to create a portfolio. Either you have an existing portfolio like a collective investment scheme. So if, let's say, an investor has a low risk tolerance, then you can shepherd the investor to a money market mutual fund or unit trust, because the money market, typically the risk is low because you'll be dealing with government of Ghana treasury bills and then other bank, fixed term deposits. So the risk is low. So if you have an existing collective investment scheme that the risk is low, then you shepherd a client whose risk tolerance is low to the money market fund. For instance, if you have a client who has a high tolerance of risk, then you shepherd it to, let's say, an equity fund, because that one the risk is high and the person is willing to do that. If it's a managed account, that is maybe someone with a deep pocket comes with a mandate, that also the investment agreement will specify what the fund manager will invest in for on behalf of the client. But in all these cases, you find that with a collective investment scheme or a managed account, there is no guaranteed return, but there will be a benchmark that the fund manager will seek to outperform. And that's really what fund management is about, to be able to outperform a certain index. And in the developed economy, when you talk about fund managers who are outperforming, they are outperforming some particular benchmark. It's not guaranteed returns. So we basically are asking the fund managers we have licensed that line of business is not what our license mandates you to do. If you want to guarantee return, then you want to operate as a bank or another specialized deposit-taking institution, in which case you go to the Bank of Ghana for a license. But with the fund manager's license we issue, is for you to use your faculties, your experience, your analytical power, to achieve interesting or mouth-watering returns for your clients. But those returns are not guaranteed. It's important for people to know that. I know that some Ghanaians, they want to know what they are getting when they approach a fund manager. And we are saying to them that investment involves a degree of risk, and we don't guarantee returns. So you need to look at the track record of the fund manager and look at what he's been able to deliver in the past to guide you to say, okay, I think I'm confident in bringing my money to you, but not to go looking for a guaranteed return, because that is not what fund management is all about.
So you've heard it here. Be wary of guaranteed returns, and it's coming from none other than the Director General of Ghana's capital markets, the Securities and Exchange, regulator of the capital markets, I beg your pardon, the Securities and Exchange Commission. We'll be right back after this break. Welcome back to the business edition of PM Express. My guest is the Director General of the Securities and Exchange Commission, Reverend Daniel Ogbami-Tetteh. Now, we're going to move into a discussion on the budget. We're learning that next week, 15th of November, the Finance Minister, Kenneth Ofori-Atta, will be presenting the 2019 budget. We want to pick the thoughts of the Director General on that, and with reference to the capital markets, and we'll conclude our discussions for today. So, Reverend, we're learning the Finance Minister will present the budget next week, satisfying a constitutional requirement, also presenting us with how they want to raise revenue or how much they want to raise, where they want to spend, and then policy initiatives, etc. In the last budget, 2018, on the theme Putting Ghana Back to Work, we saw a raft of policies and programs with regards to the capital markets. They would want to see a capital market that will provide long-term funds for some of these development projects we want to accomplish, particularly the Ghana Beyond Aid. I see that your theme for your 20th year celebration is Ghana Beyond Aid. With regards to the capital markets, how long do you think we are going to use to get there as a country, and how fast can we put things in place to make sure that we realize this dream?
It will be difficult to say how long. Okay. I think the important thing to do is to be able to say that the structures are being put in place to ensure that Ghana is developing and can hold its own without having to always go cap in hand, to anyone. When it comes to, the expectations for the budget, I'll start by saying that for the capital market to be able to thrive, it's important for the macroeconomic environment to be stable. Okay. So I would expect that the finance minister would have provisions in the budget that would be aiming to ensure that macroeconomic stability, which has been achieved in a certain sense, because we've seen relative stability in some of the key macroeconomic indicators. I believe that that must continue so that there is stability in the macroeconomic environment. Anytime there's instability, it can pose a challenge to the capital market. For instance, when interest rates are high, then you find that the interest in the capital market begins to go down. Yeah. Exactly. So we should be able to see that the finance minister is still focused on ensuring that there's stability in the macroeconomic environment. I think another key area which I want to believe the minister will touch on is how to deepen revenue mobilization, because the ability of the government of the country to be able to achieve, for instance, getting on with necessary or critical infrastructure and other capital expenditure that is needed to boost economic activity, the revenue base must be there. I believe that we've been saying it over the years that there appears to be, a number of leakages, apart from the fact that there still are many people who are outside the tax net. And I think that it will be good to see some initiatives on how the tax net will be broadened, more people get inside so that more people contribute, because the government needs the revenue to be able to spend it. The government is the big spender, the biggest spender in the economy. So when the revenue is challenged and it affects government expenditure, then you find that the whole system gets a bit tight. So I think that in terms of some general provisions, I expect the finance minister to touch on that. But specific to the capital market, I want to believe that we would see some more incentives that would come through for the capital market. So, for instance, if there are some state-owned enterprises that could be pushed to coming through the market, again we should see some some action in that area. Okay. And also then you can look at, are there some more incentives that can be given if we want to attract more companies who will be listed on the stock market, for instance. Can you throw an incentive of, let's say, a lower tax rate, just as a means of roping them in, and then also if we want to stimulate more investments, by the average Ghanaian, probably what can be done for, let's say, fund managers or various vehicles that are established to mobilize capital. It's, again, in terms of some tax, concessions that would give them that kind of, platform to operate and immobilize long-term capital. So I believe that we would see or hear, some incentives that will be given to various sectors within the capital market. I know that, for instance, in the budget statement for this year, 2018, the minister made mention of REITs. Yeah. And we as the SEC, we have worked on the regulatory framework for REITs. Okay. And we
that's real estate investment trust.
Yes, sorry.
Don't worry. It's in you, so I expect it to be like that.
Yes. So the real estate investment trust regulations, we've worked on it, and I believe that very soon we'll be issuing that. So I can expect that the finance minister will touch on it, and again maybe may throw some tax incentives, for REITs to really take off in Ghana. And if we can see REITs take off, we know that it will help to deal with the housing deficit to a large extent. So I believe that apart from general provisions to ensure that macroeconomic stability is sustained, and then there's more revenue mobilization by the government, I believe that the finance minister will be throwing in some incentives for capital market development, and I think that will help to push the Ghana Beyond Aid agenda, because the capital market, if you ask me, has a pivotal role to play in this whole vision of Ghana Beyond Aid.
Okay. All right. So my guest has been Reverend Daniel Ogbamitete. He's the Director General of the Securities and Exchange Commission. My name is Philip Nanfuri, and this is PM Express Business Edition.